Welcome to Dime to Diamonds. I'm Suzanne Porske.
And I'm Mark Farquhar. This is being brought to you by Phoenix Financial Group, your pathway to financial success.
Phoenix Financial Group provides full service solutions for all your financial needs.
We aim to be your comprehensive financial services provider, offering everything you need in one place.
Welcome back to Dime to Diamonds. I am Suzanne Porske with Phoenix Financial Group.
And I'm Mark Farquhar.
I'm Rachelle Harp with Harp Accounting.
We are so happy to be here again today.
Yeah, awesome.
How was your weekend?
It was good. Took my daughter back to college. So it was kind of sad, but I mean, it's fun. You know, it's fun. She was excited this year to go back. Last year it was a little different, but this year she's excited. She's in the sorority. She plays lacrosse. So she got a apartment with her teammates. So it was a lot better this time.
So she's off campus?
Yeah, she is. It's on, but it's across the street, so
Right.
she can walk everywhere. But yeah, she's off campus.
But she's not in student
She's not in
housing.
dorms or anything like that yet. Yeah. So it's nice. So her little apartment was nice, and it's just a lot happier this year because she didn't know anybody last year, so it's a lot better. Sad not having her
Mama.
home.
At least she's
We miss her, So mom was upset, and then it's always hard leaving, driving home, especially for mom.
And dad, because you got to be strong for mom.
Yeah, I'm good. But when you get home, that's when you realize you kind of walk by her room, because I always kind of go in there and say, "Hey, what's up?" When she gets home from work or something, and now her bed's all made and her room's all like
How many were at home this summer?
what?
How many children do you have?
5. So that was 4 of them were home. So
One got married.
one got married, needed 3 months a place to stay till their place opened up a couple weeks ago after the wedding, and then Mason, they all had a house together, so that lease was up, and so they're all kind of going their separate ways. So one got married, Cade got married, so he had to stay at our house, and then Mason he's a coach for TU, as you saw him on the previous show, and he's gonna he was at home till he kind of gets his living.
Right.
Coaches.
So who was there last night when you get home and you got your youngest? And
youngest went to grandma's, so it was just for a while it was just me, and then Kim had to go get her classroom ready for her teaching. So yeah, it's weird. It just went from all that to everybody's gone.
You and Banjo,
yeah.
There you go.
Yeah.
Righty. How was your weekend?
It was good. We did an event and had a booth out in Bixby, and the weather was fantastic. We couldn't plan anything better.
Felt really good.
It was such a nice weekend, and then we got a lot of rain, so I think some people are dealing with that here in Oklahoma, but we enjoy rain. So
That's awesome.
Yeah.
Well, today we're going to talk about the blog that's on our website,
Right.
phx.financial. And it is very timely. It is preparing to send a child off to college.
Right.
Don't forget these important topics. And the first one right out of the gate is very near and dear to my heart. It is that establishing a durable power of attorney for your now adult child.
Right. Because you don't have say so anymore.
No, at the age of 18, that's it.
Right.
You don't. So, as it says in here, when a freshman goes to college, they may have already turned 18, making them legal adults. You now can no longer speak with their doctors or access their school grades without their consent and
sometimes they need, like the great thing, sometimes they're so busy they need somebody to call, their counselor. I mean, try to leave it up to them, but sometimes they just need help. And then like bills, like you have bills pop up where I don't know, we had some doctor bills pop up for one of the kids and they wouldn't talk to us.
Right.
So it's nice to have that.
So the durable power of attorney is the only power of attorney that works all the time, whether they're incapacitated or not. I can't express that enough. Very important that a parent or someone in your family has it. That's what we've learned, because it does give you explicit authority to do it. The healthcare.
Mm-hmm.
That's another thing. Medical directives. I cannot stress this enough. I hope that everybody that is listening and watching has it on themselves and their children that are 18 or older, because it is imperative. If something is to happen to that child while they're 18 or older, you've now lost your say.
Well, it's going to the beach this summer. You had all of them going with us, so it's nice to have that prepared and done in case something comes up. Because I mean, it'd be pretty scary sometimes if you don't have that that documentation for
It allows you to make the healthcare decisions for that
right.
child, which is not really a child when they're over
Yeah,
18, but still that's
yeah.
what the medical field
Well, they're
sees.
going to
That's
want
what
you
they
to. I
see.
mean, if they're incapacitated or something, they're going to want you to make those decisions
Right,
for them, not someone else. So
right. Doctors
gives
and
a peace of
things.
mind for both your
Did you
child
do
and
that
you.
with all your kids?
Yeah, they did all of them.
That's awesome. Yes. Um, also, it talks about if you say the children aren't comfortable with it. We had a family, one of the sons was just not comfortable getting that durable power of attorney and the healthcare directives to his family.
Hmm.
Um, HIPAA, they can fill out a HIPAA form
Right,
that says at least they can be involved in the medical
right.
records, which I thought that was really
Yeah,
important. Finances, again, that like a healthcare proxy, those durable power of attorneys for them, you're able to get in there and help them with their banking. Again, if something was to take place at
yeah.
school or while they're away. Academics, I thought this was really important. You know, we don't realize, like you were talking about, what about on student loans and stuff like that? Can you talk to them if she's
Not
over 18?
if you don't have some sort of documentation, a release or power of attorney or something,
Right.
giving you that right or that opportunity. No,
Right. In our blog, it was saying in there that there are forms at schools
right.
that you can fill out. So confirm that your child's school, whether there are additional authorization forms to complete to allow access to it. Next big one. Have you had these conversations all summer? Budgeting?
Yeah, daughter does really good. She doesn't. I mean, she has the meal plan at school, so she doesn't eat a lot, but that takes care of that. She didn't really go out to eat a lot, so really gas, and then um, I don't know. She's been pretty easy, but that stuff can get out of hand if they go out on the weekends, or they take a little trip, all that kind of stuff. I mean, the way things are so expensive now, you kind of got to set your boundaries for them and teach them how to. I think the worst thing you do is like give a kid a green light and spend whatever they want, and then when they get out in the real world, they're like, "What happened?"
I was reading, Venmo is owned by PayPal.
Hmm.
So that Venmo is one of the best ways to give them money, monitor
Right,
it, see where it's being spent. Would you
right.
agree?
Yeah, I think that's good. All my kids have it. So like, even my 13-year-old's got it. If he keeps, I put money in there for him if he goes out.
It's a wallet of
spend the night
sorts,
with
right?
Yeah, he's got a little card too that he
Oh,
can use. So if he goes and spends the night with a friend, I don't have to worry about, oh my gosh, we didn't send him any money. Feel bad for
right.
Yeah.
just because I got it. So and it kind of teaches them to be, they kind of realizes how much people spend too on them. Like, I mean, if we go to Oklahoma City for Thanksgiving, and I'm like, yeah, if we stay hotel night, eat and all that, I go, it's $1,000 easy.
Mhm.
And the kids are like, what? I go, yeah. I go, if that's just a little like Oklahoma City trip. So they don't realize. So I think that's good to give them those cards or something. Kylie's got a credit card that she has on her phone too, and then I can monitor it. But just to show them how things add up pretty quick.
Right.
So
And a lot of banks have where you can do prepaid cards so
yeah,
that you then are controlling the max amount that could be spent.
right.
And then the other aspect of it is it's really good to develop a checking account for your children. It starts building credit.
Hmm.
And that's one of the things that we all struggle with at first is you have no credit until you have credit. The only
You
way to
got to
get
have it
credit
these
is
days.
to borrow.
Yeah.
So, establishing either a checking account or even taking out a small loan that you just set it
Hmm.
aside in the checking account and it's paid monthly, that really helps develop not only the budgeting, understanding how money works, understanding how
Yeah.
interest works. It gives them the opportunity to develop credit, which will help them.
At what threshold do they have to file taxes? What dollar amount?
So anything over $400, if you have income over that, um, to file, we encourage people over that. You file it. If you are over the standard deduction or under the standard deduction, we still encourage you to file.
And what is the
Because,
standard deduction?
11,000.
Oh, okay. Wonderful.
So anything under that, you still want to file because you might get something. So it's always important, even if you're a student, to go ahead and file.
Yeah.
You have to be careful when your students go off, right? Because up till age 24, you're still considered a dependent if you're going to school full time and your parents are providing half of your financial support. But they still should be filing their taxes, just saying that I'm a dependent. There's also other opportunities for credits, for education credits. The American Opportunity Credit, that's for the first 4 years. And so your parents typically are the ones that are taking that. That's up to $2,500.
Did you know this?
Yeah, we better take a look,
Yeah.
because you might be you might should be getting this.
Yeah.
And then there's the lifetime learning credit, and that one is for anyone over that's been through the first 4 years, and you're still able to get 2,000 up to 2,000. So those are definitely some tax opportunities to look.
For those that aren't aware, maybe you're just coming on board and you're just seeing this for the first time. Rachelle joined our team and our Phoenix family. She is a CPA with her own firm, but she has her own office. We love to have her in our office to come in and meet our clients, and a absolute wealth of knowledge when it comes to taxes and planning. So we're so happy to have you.
No, thank you.
I learn something every time. Every time I talk to you.
It's so much fun. I really, really enjoy sharing my knowledge and expertise in accounting, and I definitely want to help people mitigate their tax liability. The more wealth we can keep, the less we give away,
Right.
is the best option and the route we want to go. So,
I like geeking out the funny stuff. I do want to make this, any companies that are mentioned herein are for illustrative purposes only.
Right.
We are absolutely not soliciting for any of
No.
these companies. We are not getting paid for them. Let's see. It should not be considered a solicitation for the purchase of sale of securities. Any investment should be consent with your objectives, time frame, and risk tolerance. Again, we are not here. We're not supporting one platform. Insurance. Did you know about the health insurances that I didn't realize? I don't have children in college, that a lot of those colleges require the child to have health care.
Yeah, you have to tell them what you have, and they don't want to be liable for anything. So
Right.
it's even when Mason coaching for Tulsa, but he was getting his master's degree. They have a plan at school he could get on because he's too old to stay on ours. So they had a plan that he got on with them. So anyway,
well,
there's
unfortunately,
some opportunities there for the students.
most kids can stay on until they're about 26 years of age. So there is a pretty wide range where they can
Right.
stay on your insurance. But for the ones that don't
Yeah.
have that availability, that's great to
Yeah.
option to have through the school.
Right. And I was reading, and I don't know this to be fact or not, but that it's less expensive on the charter for the school sometimes than on the parents.
Correct.
So it's something to check into.
It's always something to look into.
Right.
Always good to gather all the information you can and do some analysis and decide, what is actually best fit, because it's always specific to certain situations.
Okay.
So yeah.
Well, good. So what about write-offs? Is there anything for healthcare anymore on write-offs of paying the premiums for healthcare?
So this goes back to standard deduction versus itemized deduction. They raise the standard deductions to a very nice, significant amount. So very few individuals are itemizing anymore. But it's always good to keep receipts and keep that. If we're close to that threshold, which for married filing jointly, we're looking at 29,000 for this year. So that's a very significant threshold to reach. But if you're close to that number, then we definitely want to take a deep dive and say, are we missing anything that might push us over?
Okay. So the big elephant in the room, the Tax Cut and Job Act that's going bye-bye.
Yes.
So that 29,000
is still going to stay. So
Okay.
we're still at 29,000 for our standard deductions.
Okay.
Some of the items that are going away are really more towards estate.
Okay.
planning.
And what's
And that's the reduction. So the estate side, the lifetime threshold is about to revert back to
Okay.
pre-Jobs and Tax Act. So it's about to be in half.
okay.
So people who have been planning and moving funds for that lifetime credit might be replanning and doing some structuring.
Well, I'm excited that we'll be doing a couple workshops on that and go
Yes.
deep dive into that and really explain to them so they're aware of their tax bill that could possibly be brewing. Car insurance and renter's insurance. That's why I was asking if she was on campus or off campus, because
Yeah. Renters and
renter's insurance. There was a time I was waiting for a house to be finished and moved into a duplex, and I knew better, but didn't get it.
Yeah.
And was broke into in all, and I mean all, including the jewelry box.
goodness.
Stolen.
Wow.
What I would have done to have that spent the $20 a month on renter's insurance and the little duplex, even though 80% of my life was in a storage unit.
Right.
Not my jewelry.
Yeah.
And so do you guys get
Mhm.
renter's insurance?
Right.
Okay.
Yeah. Yeah.
If they're on campus, that's what our blog is saying, then they have that kind of
Right.
protection.
Yeah.
But if they're off
Off. Yeah. You
campus,
have to get your own.
even if it's across
It's
the street.
not a lot of money, but it's definitely worth having for sure.
Right. And then car insurance. I didn't
Yeah.
realize that if they didn't take their car to school, you can actually report that to the insurance company and they give you a discount because it's not being
Oh yeah.
basically used.
Yeah.
Um, and then if they are taking it out of state, they might be going somewhere where it's cheaper for them to drive
Right.
than in a big city.
Yeah.
I don't know.
Good
Learning every day.
Right. Yeah. That's true.
But that blog on our website, all the blogs, I
Yeah.
absolutely
They're
love
good
them.
stuff. Information.
I would like to take all the credit for those blogs, but we have a team of
What, you
experts.
can write them?
I know. We have a team of
They're good.
experts that do that
Yeah.
for us, and it sure helps me. It helps us have that conversation with our
Right.
clients. I know on our website we have huge nuggets
Yeah.
of very, very, very good information. So
They're really good.
I want to circle back to that estate planning because this Thursday we have family friends that unfortunately are celebrating the life of a dear, dear aunt that unexpectedly passed away.
Right.
She thought she had IBS, went to the emergency room, only to find out she was full of cancer. Luckily, they had enough time, the few days they had together to get some of this organized.
Right.
But I'm sure had they known more, she would have planned better.
Right.
I can't stress that we offer these estate organizers, these books, and we are going to do our level best to explain to you, encourage, empower you to get yourself organized. These tabs have been created by us
Right.
because they have hit home for me. When my dad unexpectedly passed away, going into that filing cabinet was torture. Walking into that office where he sat
Mhm.
just hours before was torture. Had I only gone in and grabbed a folder and walked
Yeah.
out, it would have been a little bit easier than
easier,
sitting in
right.
there. And so, as we talk about the importance of the 18-year-olds and over your children and that durable power of attorney and those medical directives, every single adult should have it.
And being organized. I mean, it seems simple, but having that organization helps your family members so much too, because sometimes people are like, well, I don't know where that is. They find something later, like, oh, we didn't know, we didn't
Do
know
you know
they
even
had
a bank
this, or-
statement? I think you did that even when your dad passed away. Bank statements tell a lot. All of a sudden you're like, oh, look, they have this money coming in, this dividend coming in.
Yeah.
Where's that
Where's
coming in
life,
from?
yeah.
Life
People
insurance
find life
policy being
insurance
paid.
policies that, I helped a lady in Oklahoma City last year where he had a life insurance policy that she didn't know he was paying on, and he found it through the bank statement, and we helped her get the claim, and it was 100,000.
There you go.
Oh yeah. So
And long-term care. And I know with my parents, they weren't notified.
right.
MetLife was never notified. So that $80 a month or whatever that was coming out for dad and he passed away. It's not their fault that they're taking out. They've been taking it out for 10, 15 years. And then it was like, Mom, do you have one? I mean, she had broke her back. So it's just keeping it all organized. And
Another part of the organization is those life insurance policies, you also hear where, the person dies and they close the account out or something like that, and then that cancels that. I mean, it's just so important being organized, and your spouse or each other knows what you have, because I've seen it where life insurance policies the premium goes away because
right.
they were sick and then it didn't get paid. You know what I'm trying to say?
Right.
Different stuff like that.
Well,
Just
because a lot of times the spouse in their grief will want to close that checking account out because
Yeah.
it has both their
Right.
names on it. I know my mom is like that. She's like, just to see his name on everything.
Yeah.
In order to add somebody or make any change whatsoever, they don't just take the name off, they close that account. So that closes out all those
drafts.
Mhm.
Back drafts, yeah.
Right. That's paying for maybe she had some or somebody else has it. So that's
Right.
where I encourage people to take your statements, if not every month, but I don't know, once a quarter or once every 6 months and stick it in your organizational file.
Right.
I know for us, my husband knows, and my daughter knows where that file is in my office to go in there to get that taken care of. And then, I just got rid of a credit card and didn't realize the automatic payments were on it.
Oh yeah.
Pretty proud of myself. Just went to my folder and I called AAA, and I was able to keep things rolling.
Yeah.
And it was nice just to be. I'm telling you, I cannot stress enough. And our office staff does this for $700. And that too is on our website. You can go on our website. It's under estate planning and you
Right.
can read all about it. And if we can answer any questions, we encourage you to please contact us.
Right.
We will get you set up and get you financially organized. As far as
It's not for wealthy people. It's you have a house or any kind of assets.
there is
Get 'em
no
taken
way to
care of.
transfer title of a house or a vehicle without going through probate or having it established already.
Right.
That's
Yep.
that's the truth of the matter. So, and then and for tax purposes, the same thing, if you have it all inside of your file and your CPA.
Yes, having things organized and being able to come presented, it really helps with the analytics, right? What ifs? Can we go this way or can we go that way? What's going to be best? And if you have all the information, you're able to help
Right.
someone mitigate their tax liabilities. And it probably, I've never actually, been able to sit down and do that with someone. It probably takes less time if you do it ahead of schedule
Right.
than if you're scrambling after an event has happened to gather all that information.
Right.
But you can't really compare the two. But it's for sure less stressful.
Yeah.
So that's definitely an encouraging thing.
Yes. And as far as budgeting and that young child that's going away to college, I mean, my babies are always my babies. She's going to be 31 in a week. She's still my baby, even though she has a baby. I just think helping them plan and prepare financially and with a budget. Is there any certain program that you see people use the most of, like QuickBooks or Quicken on their phone or?
Right. So I've definitely seen people use Quicken. Mint is another one that has the ability to use, you link your credit card and your bank statements, and then it'll do kind of some categorization of how you're spending your money. And that's really what budgeting is. It's how are you spending your money? And are there areas where we should maybe spend a little bit less? Maybe we're buying too many coffees in the week. Maybe we're, areas where we can mitigate some of our just spending, as well as the opportunity to say, hey, when you get this check, immediately put 10% in a savings account and don't touch it. It teaches you small habits that'll last a lifetime.
Right.
And 10% may not sound like a lot, but as time goes, it
It
compounds,
does.
grows.
Yeah.
Yes.
And I don't know how many times we've helped people like to invest, and then when you look at their budget, they find out they got $300 or $400
Exactly.
a month. And they're like, what? We've seen that over and over and over.
I love the
Any idea?
conversations a year later and they go, wow, it wasn't as limiting as I thought.
Mhm.
Because usually the word budget, people don't like that word. They think
Yeah.
it's going to be limiting. And actually,
It's
it
usually
frees
free.
them up.
Mhm.
It's the opposite of
Yeah.
it. If you just have a plan and work a
Right.
plan.
Well, and for parents, the 529 college savings plan. So that's setting money aside early on in your child's life
Mhm.
for college, and it's tax free. So it's money that you're setting aside ahead before you pay taxes on. And then it comes out, and if it's for qualified education expenses, it's still not taxed.
Right.
So you're getting to put more of your money towards your child's education. And then when you think about it from a tax perspective, if you're lowering your taxable income, at the end of the year, your bill is lower. So we're taking money that you would have paid the IRS, and instead of
Use it,
giving it to
yeah.
them, we're putting it up here and we're
Yep.
setting it aside to eventually pay for your child's education. So we can come up with that sweet spot, that break even point where it's actually going to cost you. It's
That's
just taking it from one bucket and putting it
Yeah.
in a different. And that's one of the ways to think about tax planning is we're not necessarily saying we're going to save you a ton of money, but you're not going to give it
Yeah.
away to someone else. You're going to take it and put it
And use it.
and use it yourself.
Right. And then you have UTMA accounts and UGMA accounts. Whoo, I've had a big lesson on this one this last couple weeks in my life. But the Uniform Gift to Minors Act, that's a gift to a minor.
Correct.
And it stays that way until they're of age, of majority of 18.
Correct.
And then the UTMA, is a little bit more liberal as far as you can use it for their benefit. Swim lessons, summer programs. And then your 529 is specific to a school.
Correct. Education.
Education has to be, and I believe, isn't it?
Didn't they change the rule where they can use
in-state?
it if they don't use it on that particular person it was for, they can use it for another family member? I thought that came out this year.
Not
recently.
sure on if you can transfer it to a different family member or not.
Yes.
Into that, it's still a great opportunity.
Yeah.
It's not just to universities, so it can go to trade schools
Right.
too. So not everybody's going to go
That's
to a
good.
university. There are other areas that could be applied.
Right.
So yeah, it's still definitely a great opportunity to look into.
Right.
To try to help mitigate. There's also the fact that you can give this year. It's going to be $18,000 tax free, right?
As a gift.
As a gift. And when we say tax free, even if you go over that number, it's tax free, but 18,000 or less is non-reportable. So that means you don't actually have to fill out a gift tax return for 18,000 per person. So that is
What is the max?
18,000
Per
per
person?
person per individual. So if you're married filing jointly, your spouse can both give 18,000 to one individual.
Okay.
So that's 36. So we're talking that's a
Good chunk of
pretty
money.
good amount of
Yeah,
money
that
that you
is.
could gift to one person. It doesn't have to be a family member. It doesn't have to be a child. It's a gift to one person.
Okay.
That's pretty-
And then what's the ceiling on that? Do they have a ceiling on that?
Annual. You can do it annually, 18,000.
Per individual, but how many of them? What if you wanted to do that to 10 gifts?
And give it to 10 gifts.
Yep.
10 people. There is no limit to the amount of people that you give. It's just
Okay.
the amount per person.
Okay.
Isn't that pretty good?
That's good. That's really good. That's good.
We have some philanthropic clients that
Mm-hmm.
definitely, whether it is somebody at their church
Right.
or a camp, that wants kids want to go, whatever
Right.
it is, they can give it and the kids can do what they
Yeah.
want. And that's another thing that we've opened up is trust.
Mhm.
When you think maybe the child isn't old enough, or even if they're 13, 14, 15. I know I've done that where you open it in the adult name for the benefit of the child and get it a tax ID number. We've
Mhm.
assisted people with that in the office. And then that tax ID number, it just has to be the tax reported if it earns over $600.
Correct.
Is that still correct? Okay.
Correct.
So if that
You still
investment,
want to file that tax return. But yes, if the investment earns over
$600
then you're going to be filing a tax return, a gift tax return.
for that trust that was created. So
Correct.
What happens if you have your house in that and you sell the house? Is that any of that taxable in the trust?
It depends, and that's like an accountant's favorite answers. It depends.
and here goes the political answer of today.
So it depends. We're talking capital gains at this point in time. So if you are
Primary residence.
yeah, it has to be your primary residence.
Okay.
Okay. And then if you're single, you have up to 250,000 of capital
Got it.
gains
Okay.
that will not be taxed. Right.
Got it.
Anything over that amount that you get on it is going to be taxed at the capital gains.
So the same rules apply if it was in your spouse's name or your name, even if it's in that trust, it's still okay. Good deal.
Okay, so I have a good question. What if so it's 2 out of the 5 years you had to live there.
Correct.
So on the trust, is it when it was put in the trust name, or like 2 out of the
That's good.
5 years?
2 out of the
That's a good
last
question.
5 years.
The trust had to have had that property in that
Is it with the-
name,
in the-
or
Yeah. Is it when it goes into the name when it starts, or is it since the people
It'll be
that own
based
the
off
house?
the people.
the trustees,
Yeah.
the executors?
The individuals who were living in the house, if they were in that for the last
2
out of the
5
5
years.
So it doesn't have to be consecutive 2 years. You could live in one house for 1 year
Right.
and one in the other, and then move back and stuff. But it has to be in the last
2 out of the 5
5
years
Right.
to avoid the capital gains on that. You're not moving.
Nope.
Okay, just let you know.
No.
Not for 2 years, right?
Not for 2 years now. Not for 2 years now. No.
Well, we've had a lot of our clients do that. They
Yeah.
put their home, which we highly recommend, put your home in the trust
Mhm.
name. If they're not comfortable having that in their tax ID number, one of their tax ID numbers, then we get them a tax ID number.
Yeah.
Not that hard. Like they give those away all the time. Not give them away. You fill out the
Yeah.
paperwork for it. So, all right. Anything else we wanted to cover on this episode?
No, I think the only thing going back to the kids when they're
Right.
young adults, what I've kind of seen is that credit issue. Like it's so weird. Back when we were kids, do not get a credit card, this or that, but you've got this
Right.
because
establish your credit.
they go try to rent a car, they go try to get a alarm system on their, you know, I'm trying to say,
Mhm.
you got to have credit. So it's just, that's the thing I've noticed with the kids like while they're growing up.
So the
is-
best thing to do, open a checking account.
Mhm.
I know on credit scores it has to there's a number of different factors in there.
Yeah.
So you've got that
Like the,
FICO score.
three lines, I think is kind of the magic number.
So how long they've had a relationship with a financial institution, of course, a credit card.
Right.
I'm not sure. Let's see what else.
And then usually you have to take out a loan and repay it.
Okay.
Yeah.
And so that's where you kind of work with the credit union or someplace
Yeah.
like that, where you may take out a line of credit or take out a loan. This is where you're teaching your kid just in general to paying things back. So yes, you're paying a little bit in interest. A lot of them have the lower rates.
Put them on, like when we bought Kylie's car, I put her on there with us and it gave her,
Yeah,
Plus
sure.
credit.
So-
Also, life insurance. This
Mhm.
is really coming in strong for me right now, is really encouraging people to get life insurance on not just themselves. I know August is Life Insurance Awareness Month, but also our children and getting them their own policy at a
Yeah.
young age when they're healthy.
yes, that's a big difference. People don't
Gosh, and it's
understand
so
how important that is.
expensive.
I know. I mean, they wait till we get calls all the time where, well, the term part they buy it when that's the other part where they buy it young and then they don't think about, well, when I'm 60 or 50, you know, things change a lot. So
Right.
it's so important to have that plan in place where you have, yeah, terms probably mostly the way to go because it's cheap. But then you've got to remember when you're 25 and you buy that 20-year and then it's up, you need to make sure you have that conversion option on that one where you can convert it to a permanent policy or you
Right.
buy another policy that you have some sort of, because when we're 50, 55, we're still taking care of kids and
What is the point of life insurance?
to make your family whole. Like
Right.
when you go away, like if something happens to me, I don't want them to have to give up, move.
Financially. Mhm.
Yeah. I don't want it to move. I have mine set up where I don't want Kim to work. So
They can
I have
continue the
enough
same
where she can,
lifestyle.
where she can same lifestyle and not, you know,
Right.
pay off debt, income. You can get
And kids
this-
with student loans. So
Yeah.
getting a life insurance policy. So for a couple of reasons is what I usually tell people is you want a larger amount because it's less expensive. You're hoping to God it never happens. I know the younger that the person is, it seems like the celebration of life is much more important and much more expensive.
Mhm.
So for those funeral costs, also to pay off, like I said, the student loans
Right.
on that. And then they do transition. I mean, 4 or 5 years out of college. They're in college for 4 years. Then they buy that first house.
Yeah.
It's already part of their budget. And
Yeah.
if it's a large amount, then it will cover the mortgage
Right.
if anything was to happen. Just even if it was just a transition
Just
until
think how
they got the
much-
house sold.
Just think how much we were looking at pictures this weekend. Think how much change there is from your kids when they're 15 to 25 years. It's like they're going from like little, you know,
Braces and a part in the middle
bratty
of your girl.
teenagers to having a kid and like, you
Well,
know,
yeah, look
on a
at your
house.
Spence and
mean,
Amy.
it's
Yeah,
crazy.
both of them have
Yeah.
kids,
I know.
and they're got another
Things
one.
happen
Another one.
fast. So on that life, they have so many different ways. You can get a term and you have a conversion option where you have the option to convert any part of that term, any the full amount or a partial amount, and it goes back to the age when you purchased it. So
Right.
and you can convert it to a permanent policy, which that's
So this is where we're encouraging you to have these conversations. To set your appointments. Come in and see us. Bring in your children. I had a wonderful appointments with 2 grown adult children of clients that were referred to me. It was nice because they're in their 20s, late 20s and 30s now, and what would you do if you're us? Like, we know because our parents tell us, but they wanted to hear it from another source.
Yeah.
And life insurance. There's so many different policies out there. So let us educate you
Yeah.
on them. You know, we say term and with a conversion option because you never know. We'll see how COVID plays out in the
Yeah.
years to come. But if you have something that happens like a COVID and then you've got some sort of an ailment, illness from it, you've got an issue with blood clots now or something that's on there, you're either going to be, it's more expensive to get
Right.
coverage later on, or you're not going to be able to
Well,
get it.
there's people out there that say just buy term only, but I'm just saying you got to have more planning than that because
Yes.
there's so many other variables that could happen that could get you in trouble later on down the road or put you in a bad
Right,
situation.
right.
So,
Well, and then you've got your whole life, your universal life, all these things, and those are the term.
Yeah.
with a savings attached to it.
It depends on how you use them. They're like a tool. So
Right.
there's different ways to use those.
I
so.
think people want the easy way out and they go, oh, I have a what's say a universal life policy. It's a savings account attached to it.
Right.
Got to monitor that savings
Yeah.
account. There's nothing that, anything that's worth it's going to take some planning and some managing.
And then the other, which you dealt with this too, is do I have a life or do I have a accidental? That's huge too, because you get people calling you going, my husband died, he was in a car wreck, or no, I'm sorry, the other way, had a heart attack, and then you find out that the policy they have is an accident.
Right. No, I had a client when I worked at Bank of America. I was still in college. They had an accidental death and dismemberment policy. They were coming back from Lake Arrowhead, and they were in a station wagon, and Dad was in the vehicle in front of them because he met them after work. And so they're coming down, and Dad saw a semi truck coming head on towards his family. So he swerved to kind of block it. Well, the semi truck hit his back end and he went down the mountain.
Yeah.
And it was an accident. And not to get too graphic, he was decapitated. And so all those little nuances and rules on the accidental death and dismemberment, we went through together as a family. It was very hard, but
Yeah.
they are like, he qualified for all this. And they denied the accidental death and dismemberment policy. And for the life of us, we couldn't figure it out until I read the letter and it said, well, he caused the accident. And so if there's all those little nuances, and that's why it's so cheap.
Yeah, exactly.
So I always tell people, if they're going to pay for it for you, because credit cards will give you that sometimes for free, definitely take it. If it's less than $1 a month,
Right.
take it.
The other one is mortgage insurance, which if you go buy a house, you get all these things in the mail. You need to come see us because those are expensive, and plan on, you just need to look.
Who's the beneficiary on the mortgage insurance?
Trust?
No, the mortgage company.
Oh, no, I'm sorry. Okay. Yeah, on those. Yeah.
I had a client that
you
had
a
that.
story about this.
Yes. Her house got paid off. She never worked a day in her life. She raised 6 children. Her husband passed away.
Yeah, you want to be
He
in
too was
control
outside
of that.
gardening.
You want to be in control of where your death benefit.
She didn't have any money for his burial, but she had her house paid off. So I helped buy the boxes, and her grown children came over and we packed her up and put a for sale sign. They put a lien from the funeral home on her home to get paid when it sold. So there's all kinds of nuances like that. We've got stories for days.
There is.
Together, collectively, we have about 65 years in this industry, 40 here, 25 there.
And plus over here.
Yes, yours. I need to keep turning my back to you. So.
You're like,
All right. Well, that's it for today. We thank you so much for joining us. Thank you so much for all your
Yes.
insight, guys. And please join us here again.
One thing, let me know about the red sheet.
Oh, I know. He didn't get the memo. At least he could have had red socks on. So that is all. We thank you so much for joining us and have a great rest of your day. Bye. In closing, you have been tuned in to Dime to Diamonds, sponsored by Phoenix Financial Group, where we provide full service solutions for all of your financial needs. We do this through organization and offering you everything in one place.